Hi everyone, welcome to the channel. Today I have Ashwin with me. Ashwin is a crypto investor at Dragonfly Capital, a global crypto venture fund with offices in the US and China. Previously, Ashwin was a core engineer and researcher at Thundercore, where he worked on the design and implementation of the POS consensus module. Before this, Ashwin was a student at Duke University, where he studied computer science and performed research on distributed systems and computational biology. So, hi, Ashwin. It's great to have you here. I'd like you to start off by actually telling us how you broke into the crypto VC industry and how you actually also got into crypto.
Sure. Yeah. Thanks for having me, Arnav. It's great to be here. I guess to answer your first question, so I got interested in cryptocurrencies relatively early on. So when I was in high school, I sort of first read the Gawker article about the Silk Road. Thought it was really interesting. Was really interesting in sort of this idea that there could be sort of darknet marketplaces that exist, and you'd be able to interact with a monetary asset, which is not necessarily fiat currency, would be untrackable and untraceable. So I got interested in that, started playing around with privacy technology. At the time, I wasn't really sort of that deep into computer science, so I didn't understand sort of all the inner machinations of Bitcoin, but started buying some on sort of Bitcoin ATMs and just sort of experimenting around with different wallet services. So it actually wasn't until I was a student at Duke where I got introduced to Ethereum, I guess in early 2016, by one of my friends at the university who actually ended up co-founding a group known as Tetras Capital, which famously published the Ether short thesis, I guess, in 2017. And that's when I really started doing more research, getting more involved with the research work that was going on at Duke, and getting more involved with the Ethereum community. After I graduated from Duke, I guess, like you said, I joined Thundercore. I knew I wanted to work on layer one blockchains, so this seemed like a reasonable bet to sort of solve Ethereum scalability woes as we're seeing more exacerbated today. So I worked there for about a month and a year and a month, specifically working with Professor Elaine Shi on the core consensus code and research there. And then after that, after I left, so I decided to leave after it sort of was clear that attracting a developer community was going to be extremely difficult. And there were sort of some other internal problems that the company was facing. So I decided to leave. I had really no idea what I wanted to do. Started just going to hackathons, messing around with things. I actually built sort of a multi-leg arbitrage bot at the DeFi hackathon last year. Was sort of experimenting with ideas before I decided to start talking to some of the folks in the venture community that I knew. Ended up meeting with Hasib. He was looking for someone from Dragonfly. He was looking for someone that was really deep technically, really enjoyed doing research, but also was interested in learning more about venture, and sort of ended up being a great fit. And so I decided to join him, and it's been about 8 months since I joined Dragonfly.
Cool. So coming to Dragonfly, like, what's your investment thesis? Like, what sort of projects are you investing in? I think Dragonfly is a pretty renowned name in the crypto space. But still, like, I think, and looking at your portfolio, I see tokens, I see some protocol like chains, as well as some revenue projects. Like, so what's your investment thesis, and what sort of projects are you investing in?
Yeah. So Dragonfly, as you sort of said, is a global crypto venture fund. So we invest really across the board. So we have our portfolio consists of centralized finance projects, including centralized exchanges such as Bybit, all the way across the spectrum to layer one projects like Space Mesh and Oasis Labs to DeFi projects like UMA, Open, DerivateX, etc. So our thesis kind of ranges across the entire crypto spectrum. My focus is specifically on scalability. So layer twos, interesting new layer one projects, privacy plays, or DeFi applications. And we invest both in equity and tokens. I can go a little bit more into our DeFi thesis specifically because it's kind of been what's hot right now, and obviously what we've been focused on the
Sure.
past 8 months. Sure. So DeFi specifically, the two main focuses, I guess, in the exchange space have been specifically on aggregation and derivatives. So recently, I guess we just announced yesterday, actually, we did an investment in 1inch, which is a sort of DeFi aggregator, aggregates all DeFi liquidity through sort of one user interface. It gives basically the best quotes and prices, and allows people to exchange assets, relatively seamlessly. The other play that we think is going to emerge in decentralized finance is derivatives. So we invested in Open because we think options are potentially, the growth of the options market is something that we're going to see overwhelmingly over the next 6 months to a year. as well as perpetual futures. So as you know, centralized exchanges, centralized derivative exchanges, the highest volume product by far is perpetual futures. And we think that's going to translate almost directly over to the decentralized exchange market as regulatory restrictions sort of pick up and traders are become more aware of how great these instruments are to get leverage.
Okay. So what's when you started, has the thesis changed since when you started and now? Like I think in 2017 and those times, everyone was just investing mostly in tokens or exchanges. So now I think you have sort of now you have a broader perspective on your thesis, right?
Mm-hmm. Yeah, so I think it's evolved drastically, right? Actually, Dragonfly initially, to give you some history, started as a fund of funds. So we were primarily investing when it was, before I joined, before Hasib joined, Dragonfly was initially investing in other crypto venture funds that we thought had good exposure to the space. So that's including Polychain, Scalar, Multicoin, Metastable, et cetera. And it sort of evolved over time as we started seeing the growth of the centralized exchange market. We started investing in centralized exchanges. Then we moved into obviously new layer ones as people saw Ethereum's inability to scale, I guess, with CryptoKitties in 2018. And then from there, it sort of evolved completely to focus on more of the application layer. So layer twos plus DeFi and decentralized applications.
Okay. So right now, what are some exciting things that you're looking at? I think we have YAM. I'm sure you would have seen that, and yield farming. That is all the hype.
Of
And
course.
obviously that's, I think, all that is like community driven sort of projects. People aren't taking any investments as such for those yield farming projects, but overall you are looking at DeFi, and like what's the current trend that you're seeing, and yeah, for the say next 6 months or a year or so, what sort of projects you feel are going to kick off?
Mm-hmm. So I think the current state of DeFi is hard to tell because it's a bit of a mania. So everything that we've seen is like massively inflated token valuations. For example, Serum launched their token sale yesterday. It 11x in like 30 minutes. It's now valued at $18 billion, fully diluted. YAM obviously with over 450 million in sort of locked up value. Right now it's with unaudited contracts. It's completely insane. But I mean, we remain optimistic on the future of DeFi, right? I mean, I think right now, obviously, if the valuations are inflated, it's a great time to buy things early. But we've been investing in the space for a while. Some of the things we're really excited about are sort of the launch of new governance tokens. So things like Curve Finance, which should be released fairly soon. 1inch is obviously doing a token model, which we're excited about for the future. And then Open V2 is also probably going to be coming out sometime next year. That we're really excited for them to launch a more governance structure, developed governance structure plus a yield farming element. I mean, I think so when Comp initially launched, we were really excited to see them move sort of following the progressive decentralization playbook of starting as a centralized company and then decentralizing over time. I think as soon as Comp launched, it sort of set off this mania where people were like, hey, this Comp token has no value really assigned to it naturally. Basically, it's not an entitlement to future cash flows or dividends or anything. But it's kind of a open playbook for token holders to decide what to do with the protocol in the future. And so I think another thing we're really excited about is to see how these open protocols actually develop over time, because there's sort of no playbook open and no one really knows what's going to happen, but the possibilities are really endless. Comp as it exists today doesn't really do much other than allow you to basically change the protocol. But eventually you can imagine this thing as an interest bearing or entitlement to cash flows or the interest that's been earned on the lending market. And so we're really excited to see these governance models develop in the future.
Yeah, I think
Hopefully that answers your question.
I saw your blog post on decentralized governance, imitation, or innovation. Yeah, I read
Right.
that, and you sort of explain how the current world, we have IPOs and we have how the governance works there. So yeah, like if you can sort of I think sum it up in 2-3 minutes, that blog post again, I think that would be also valuable for people who are sort of interested in looking at the governance space. I really found the article to be really good. Yeah.
Awesome. Yeah, so I think the main purpose of that article was to point out what I perceived as kind of a aura of innovation that actually doesn't really exist in the space. So, I think governance tokens and the release of these sort of like yield farming elements are really useful tools to attract users to the protocol, get initial liquidity, attract sort of stickier liquidity to the protocols. I don't think necessarily that they're very innovative. And so the reason that I outlined, I guess, in the post is I basically walked through and compared all of the current governance mechanisms. So whether you call it Maker, where you can buy sort of these governance tokens on a liquid marketplace, very similar to sort of shares in a corporation. Or if you look at Compound, same sort of idea. You could buy this token on a liquid marketplace. The shares are distributed to users of the protocol, which kind of mirrors what's called a worker cooperative or consumer cooperative in traditional sort of business. But basically walk through all these different elements and compare them all to sort of their counterparts, which exist in the centralized world, and then sort of compare and contrast the differences. And at the end of the article, what I sort of point out is that there actually are not that many differences between what currently exists in the centralized world and what the governance tokens as they exist in the decentralized world today. And the main idea here was basically not to shit on any of the tokens which are launching today, but to just kind of point out that right now, as the governance space exists, it's not really, it's hard to categorize it as innovation, at least in my eyes. It's easier to categorize it as a translation of centralized systems onto decentralized substrates, being blockchains. But I'm really excited to hopefully see some innovation in the future. But I still believe right now that we're more in the imitation phase than the innovation phase. So that was kind of the point of the blog post.
Okay, gotcha. So apart from DeFi and these things, like, are you sort of investing and looking at projects that increase usability of crypto, like say get us to the next stage in adoption? Like what sort of projects are you seeing there? Maybe some interesting wallets or key management solutions, or some interesting projects, or what are you seeing in that space that sort of brings the next generation of people into crypto?
Mm-hmm. Yeah, it's a good question. I mean, we definitely look at wallet services. So, for example, obviously, I think one of my colleagues wrote a Twitter post about how MetaMask is just like hasn't really evolved or hasn't really changed in 2 years, and I think it's pretty spot on, right? If you look at MetaMask today, it's pretty difficult for the average retail user to get started with using. You have these really difficult to sort of interact with hex characters that are going to throw a lot of people off. And you still, it takes time to sort of interact with tokens and get used to signing and confirming transactions. And this will, obviously gas price auctions are a terrible UX experience for users who can't get their transactions confirmed. So I think MetaMask still has a long way to go. But I think one thing that we've been excited about is sort of the proliferation of mobile wallet services that serve as sort of top of the funnel ways for users, whether they be retail or otherwise, to access DeFi applications. So things like Argent Wallet, which is one that we looked at, we obviously didn't invest in it, but it was offers a great platform for people to start interacting with crypto, gives them a fiat on ramp, and allows them to start interacting with DeFi projects within the application, which I think is a great user experience. I think our main concern around investing in a lot of these projects was sort of the lack of differentiation. So I think what we've seen is we have IM Token, which is doing really well, sort of in the East. We have Argent, which is doing pretty well in the West, but we haven't really seen a lot of differentiation between the products and protocols. They're largely really similar, but I think there still remains a lot of problems that need to be solved. For example, fiat on ramps, as you mentioned, it's still really expensive. It's not a great user experience. You still have to import your debit card into these wallet services to actually buy Ether. You're going to buy it at premium, and even if they abstract and pay for your gas costs, as sort of Argent does. It's still not a great user experience to be waiting for, at this point, 10 minutes if your transaction is not going to get confirmed on the Ethereum blockchain due to congestion. But I don't know. I think they serve as useful tools, and I think they still have a long way to go before we can actually call them good enough to bring on sort of mainstream users.
Okay, gotcha. Yeah, I think as Ethereum scales and other chains also, may get some adoption, then some of the problems get solved, and as we have better UX, that solves, that again multiplies and gives a better experience. So what, and also, like, as you mentioned that there are some projects that are in the East that are popular in the Western world. Like in general, like what sort of projects are you investing in, like in terms of geography? And I think crypto is quite distributed, but still, yeah, there's some, I think, like many of the most of the innovation is still, I would say, happening in the Western world. Or where do you see, yeah, what sort of geographical trends do you see in crypto currently?
Yeah, it's a good question. Um, so in terms of innovation, I think you're absolutely right. So I think in terms of like the innovation that we've seen, especially sort of in the DeFi landscape, it's largely happening in the West. So most of the sort of innovative new ideas, I think, are really coming from the West in terms of lending, borrowing, interest rate swap protocols, all kinds of new designs and mechanisms, are mostly, at least it seems like, coming from the West still. Um, but the funny thing is, with a lot of these protocols, is that we're seeing most of the adoption actually take place in the East. So Chinese users love obviously using DeFi. They love getting exposure away from the RMB and moving into sort of Ethereum, Bitcoin, and the DeFi landscape. And obviously protocols like DeForce, while they're not maybe particularly innovative, they're offering new things now like synthetics, and they're offering Chinese users a sort of native service, which I think the localization element of an application actually helps them actually attract that user base in the East. So I think it is as a broad trend, at least right now. I think we're saying, like, most of the innovation is still happening in the West. I do think that this can flip though. I think recently we've seen more projects that are innovating in the East, especially as these sort of like more and more of these crypto native teams start to develop in the East. So for example, we saw a team that used to work at DX, which is a decentralized exchange that exists in China, sort of like very crypto native, have worked in the industry for a while, but they're sort of starting to innovate on new ideas, whether it be for an AMM solution or privacy solutions or things like this. So I think as a community sort of grows and evolves in the East, we'll start to see more innovation. But I think for right now, it's pretty innovation constrained to the West, with a lot of the adoption taking place in the East.
Yeah, I think from the user side of things, like if you look at, say, India or China, the innovation that has taken place in the fintech, like consumer fintech side of things, is quite high here. And like, I think that
Mm-hmm.
might be the reason that we see adoption of these things as well. You know, people in India, for example, don't have debit cards and credit cards, but they still, now they have started interacting with banking services. Yeah. Also, I had one, like, I actually open sourced some of the questions to a couple of my founder friends, and one question was that what where like where should they register the company, like in terms of do VCs look at that, like, say if someone is registering in Malta or Estonia, um,
Mm-hmm.
are crypto VCs, or maybe you can speak specifically for Dragonfly. Yeah, what does that play into account, or are you guys open? Like, yeah, are you open for people registering in, say, a crypto friendly country, but that might not have a very good legislative system? Um,
Mm-hmm.
yeah.
Yeah. So I think it largely depends on the company, on the background of the founder, where they sort of have citizenship. And I think we actually don't really care that much. So I think obviously depending on what the company actually does, for example, if it's like sort of a BitMEX competitor, you want to obviously have uh, basically be able to offer your product anywhere, but you want it to have sort of favorable laws, right? So that you don't necessarily have to report what you're doing with your balance sheet, and still be able to offer the product and service to whatever jurisdiction you want, while also having favorable tax laws. So I think it actually just depends on what you're doing, and so where it fits in the ecosystem. I don't think that we necessarily have a preference either way. We're a Cayman-based fund, so we can invest across the board wherever the company's actually incorporated or located. I think it largely just depends on what you're doing.
Okay, gotcha. Yeah, I think some of the VCs, they're like, no, we want to invest in, say, a US or Singapore based registered company.
Mm-hmm.
But yeah, anyways, like, and also in terms of accelerators, and I think there's a lot of in the 2017 18 time, or 16 17 18 time frame, we had many crypto VC funds that actually now closed down.
Mm-hmm.
And I think now there are still many VC funds, crypto VC funds, but I don't see many early stage, like, accelerators, like specifically for crypto. There are a couple of I think Outlier Ventures is one. Then there is in Canada, there's one with University of Toronto, CDL. Then a couple of others as well. But have you seen that space evolve? Like early stage capital is that is has there been some more like investments towards like early stage founders and stuff?
Yeah, I think since 2017, the trend has sort of shifted towards seed and Series A. So I think seed and Series A has gotten a lot more competitive, especially for the very early stages. Because frankly, I think given the nascency of the crypto industry, there aren't that many projects really that are at the Series B, C, and above stage, right? I mean, it's really a handful. And so if you're a large fund and you need to deploy more capital, it makes a lot of sense. But the number of products that have actually made it to that stage, given that the industry has really only been around, DeFi specifically has only really been around for like a year and a half,
Yeah.
2 years now. It's really early. So I think there has actually been significantly more funds emerging for the seed and Series A stage, whether it's investing in a white paper and two people, pre-product, or whether it's investing in like a very early stage product. So it's gotten a lot more competitive, at least for sort of winning deals. But yeah, I think the later stage game still remains kind of up for grabs because no one's really emerged because frankly there aren't really that many companies that have hit that stage yet.
Yeah, there and yeah, I think there aren't many new users coming as well. Since 2017, 18. But
Yeah.
like how do you see, how do you, when you look at say the crypto VC ecosystem, how do you compare to the like normal VC ecosystem? Like what are there some differences, or it's just like everything is same? I think there's
Mhm.
a lot more influence of Twitter, and everything is like sort of democratized. Uh,
Right.
but yeah, like yeah, how do you compare these two ecosystems?
Yeah, I think it's very different, like you're saying. I mean, I think with traditional VC, it's there's a lot. So say if you're sort of a SaaS based, you're investing primarily in SaaS products. I think as if you're a VC that's doing that, you sort of have a defined playbook. You have sort of all of these definitions about things you're looking for, whether it be at the early stages, mid stage, or late stage, because it's sort of defined. It's well known, sort of what needs to happen, what you're looking for. And it's very easy to sort of pattern match based off previous successes. And with this industry, there's really nothing to pattern match based off of, right? I mean, it's like you could say that yams are not going to do well, and yet Yam has 450 million locked in their protocol after 3 days. So it's very difficult to sort of pattern match to what might be successful in the future. So I think based off that alone, it's difficult to tell. And that's a big separator between traditional VCs and crypto VCs. I think another one is that crypto is kind of global, right? And if it's a global industry, by its very nature, it's not going to be sort of centered in Silicon Valley, and you need to be aware of things that are happening outside of Silicon Valley, especially if you want to participate in those deals, right? I mean, a lot of the best companies we've seen, Maker, for example, is like headquartered half in Switzerland, I believe. I could be wrong about that, but it's headquartered somewhere in Europe. Um, so I think that's another thing that plays a big part. And obviously Twitter is a big influence because of that, because that's how people get the word out, right, about their new projects, protocols that they're working on, and where they're working on them. I think another big thing is that you actually, with traditional VC, typically you're looking to make an investment and you're going to be locked up for 5 to 7 years until there's an exit opportunity, right? I think with crypto, it's very different, right? Because as we're seeing with things like Compound, you achieve liquidity within 2 years of your investment. And while you still may have a lockup for a couple of years, you need to decide what you want to do with those funds, right? So you have to be a little bit more active with your management of your portfolio, whether it's rebalancing or move into other funds. And all early stage investments, you also have to be aware of whether they're equity or tokens, because if you get tokens, then you need to be ready to custody them. You need to be ready and prepared to look at market prices more often. And so I think there's a lot of elements with VC that sort of blend with traditional hedge funds in that sense, because you have to sort of be aware of the market movements, trading movements, things that are occurring in the liquid markets, as well as things that are happening sort of in the private market sector. Yeah, I think that answers it.
Yeah, makes sense. Yeah, for I think, yeah, crypto funds as well. Like what how do you get, like how do people reach out to you, like in general? Like for say normal VCs, what people look at is say founder background. They say, okay, did they work at Google or Facebook? And
Right,
if someone gets them a meeting, a partner gets them a meeting, and then yeah, for early stage specifically, and then they
right.
look at some, a starting of a product market fit, and some initial users. But yeah, in general for crypto, what do you look at, like, and how do you mostly get your deals? Is it
Yeah, so I think like to touch specifically on founder background first, I think it matters a lot less, right? So I think a lot of the successful founders we've seen, for example, take any of the take like Synthetics, for example, founders are from Australia. Take Aave, for example, the found like it's based sort of in Finland, or take take OneInch, for example, um, kind of like Russian hackers who are building this project. So I think founder background doesn't really matter as much, to be quite honest. I mean, I think a lot of what we're looking for is more like, does the team understand crypto? And usually, if you're crypto native and you understand crypto really well, you don't have this sort of high pedigree background because you've been hacking away on your computer or like trading these active markets for years. And I think that's one thing that's actually really cool because it's kind of a democratization force. It's very easy to tell if someone comes from a background of Facebook that they don't understand Bitcoin, Ethereum, or really crypto at all, as opposed to someone who's been sort of immersed in the ecosystem for years. Um, I think your other point was on sort of how do we get deals, how do we source deals. I think it's quite interesting because there are a lot of different ways to source deals. I mean, I think we use Twitter pretty extensively to try to look through what's actually happening, what are new products that are launching, what's sort of gaining traction. Another thing is just sort of using traditional VC, so traditional VC networks. So we usually will see deals from other funds that will send them over to us or otherwise. I mean, another big part of it is being active on research, right? So publishing Medium posts, publishing active Twitter comments, and just being involved with the community that gives you sort of natural, organic people that reach out to you when they're working on a project to try to talk to you about potentially raising money for that project if they would really like your Medium posts or you've been active in the community. So those are kind of the main three ways.
okay? Gotcha. Um, yeah, I think traditional VCs, yeah, when they're investing, there's a lot of collusion as well, because they are all based in SF, and then
Yeah,
yeah, that's how sort of, if you read the early history of VCs, like that's how they sort of started. But anyways, that's I think not that much in crypto because everyone is distributed and you sort of source deals from like online. Maybe
right,
people, yeah, people, and especially now, during COVID. Also,
right.
I think I also wanted to talk about a couple of your other blog posts that you've written about, which was
Sure.
on the death of plasma, and now discussion overall on. I actually read all your blog posts. I highly recommend others as well to check out Ashwin's articles. On the death of plasma, you discussed the overall layer two ecosystem, and I think now we are looking at optimistic rollups, and there's I think diversify also, that is
Mm-hmm.
ZK rollups. So yeah, like how do you see the current layer two ecosystem evolving? Some interesting projects you have seen.
Yeah. Yeah, I think sort of to reiterate my post, I think I kind of sort of called the death of plasma. I'm welcome to if you want to debate me on Twitter about this. Happy to talk to anyone who wants to try to debate me because I think it's still an interesting point. So in terms of interesting layer two projects, I think as we're seeing right now, I mean, the gas prices are over 200. It's the Ethereum is essentially completely clogged, and we need to have sort of a scalability solution that exists. The interesting thing though is that even given my post, I think that layer twos are still really in the early stages. Most of the layer twos that we've seen launched today are kind of like Loopring, Diversify, ZK Sync through Matter Labs. Then you have Optimism with optimistic rollups coming out soon, Fuel Labs, which is another layer two solution, and then state channel solutions, and then sort of other layer ones, which want to act as layer twos. So I think the ecosystem still has a long way to evolve. So, I mean, rollups obviously I think are a great move forward because they allow for tremendous scalability, potentially with smart contract support. So you're going to get almost native smart contract support through optimistic rollups initially upon launch. With ZK rollups, it's going to take a little bit more work. I think Matter is working really hard on this to try to get ZK Sync to support generalized smart contracts. But obviously, it's going to be a different programming language than Solidity. So I think it's really going to be interesting to see. I think right now they're really in the early stages because we've seen, despite sort of the clogginess of Ethereum, we haven't really seen that much adoption in the layer two landscape yet. But I think it's something that's definitely coming. And I think as these solutions become more and more apparent and obvious, both in terms of how cheap they will be to interact with, but also with the flexibility and ease of use, meaning that you would be able to deploy smart contracts and interact with them just like the Ethereum main chain. It'll be interesting. One of my fears, though, is that you lose sort of the DeFi Lego support. So when you launch a layer 2 and you deploy on a layer 2, you sort of lose this interoperability element that comes with DeFi, right? So you can't necessarily have composability or atomicity through the flash loan because by definition, your contract calls are now going to be asynchronous across a layer 2. So I think that's sort of like there's still sort of a lot of unsolved problems which exist between layer 1s and layer 2s, but I'm excited to see it evolve. Really excited for rollups. I think they still have a long way to go, but I think that space should really start to shake out in the next 6 to 8 months. Another thing I'm really excited about is sort of new layer 1s that are bootstrapping themselves on Ethereum. So what I mean by that is things like Solana launching with Serum, basically using Ethereum to bootstrap their user growth, and then providing an easy bridge for people to start using Solana. Near also is another team that's really actively working on developing this idea out. And I think if anyone's interested, like you should go check out the Reddit sort of scaling bake-off competition, which is Reddit's sort of competition for layer 2s. They have sort of a really comprehensive list of layer 2s, and you can go check out and see which ones you think are interesting.
Yeah, gotcha. Okay, I think that we did cover quite a lot. What advice would you give for, say, founders who are building in the space, in terms of what interest, like how do they reach out to VCs? What sort of funding approach they should take? Yeah.
Mm-hmm. Yeah, I think for most founders, if you depends on, I guess, the stage you're at. If you're just sort of tinkering around with ideas, feel free to reach out to me on Twitter or anybody on my team via Twitter or Telegram. I can sort of send you my my email as well, and we're happy to talk through any ideas that you guys are working on. I think the big thing is that if you think about funding, you should be prepared with at least some sort of thesis around what you're building and why, and have a sort of a reasoning for a long-term strategic standpoint. If you're just sort of building a project or protocol that you sort of it's a hobby project that you're interested in, I think we would maybe be interested in it depending on the quality of the work. But largely we're interested in if you have some sort of technical white paper or analysis that sort of describes how the protocol you're wanting to design works. Even if you're pre-product, we're happy to take a look at it. And also if you're looking to raise funding, please feel free to engage me or anyone else, and be happy to take a look at a deck or any other materials. But I think sort of the fundraising environment is pretty hot right now. So I think if you're a DeFi product looking to raise money in the space, I would say if you're a founder, you should go ahead and try to raise money, because there's never really been a hotter environment than now. And most funds are sort of looking to actively deploy more capital in DeFi. If you're in other sectors, I would maybe wait, because DeFi is sort of the hottest sector right now. But obviously, we're open to looking at any sort of sector.
Okay, cool. Yeah, thanks Ashwin for taking the time out, and hope to see more of your articles. And I think overall Dragonfly team, Hasib obviously writes great articles, and everyone, all of your teams, Tom, all of your team members, Tom also, I think I read his articles as well. So yeah, I wish you the best in the future, and hope you make good bets in the DeFi space and overall crypto space. Yeah.
Definitely. Yeah. Thanks for having me, Arnav. This was great.